Welcome back to the channel, guys. I'm your host, Buckning, and today we're going to give you an update on the portfolio, our buys at the end of the week here. And yeah, we're going to update the Track Your Dividends site to update you guys on the performance of the portfolio, although we probably already know how the performance is going based on the markets. And of course, historically, September is always the worst performing month out of the whole year when it comes to performance in the stock market. But that's all right. So if you're new to the channel, welcome. This is where we put $100 a week into a tax-free savings account to build a dividend portfolio right in front of your eyes. And if you're not new, welcome back. So as you can see here, the portfolio at the end of the week, I almost thought the markets weren't open because today is actually a holiday in Canada. But no, they were open. So we were able to make a few purchases here. So portfolio is closed out at $13,244.37. On the day here, we're down $30.24, down 0.23%. For the 1 week, down $204.42, down 1.51%. For the 1 month, down $553.06, down 4%. For the 3 months, down $324.86, down 2.39%. For the 1 year, down $560.61, down 4.05%. And for the all, since starting this portfolio, we're only up $383.80, up 2.97%. Of course, I have a feeling that we're going to be going negative ever since starting this portfolio. But it is what it is. In the cash account, we got $21.07. And the purchases we made today, of course, are in VFV, which is the Vanguard S&P 500 Index ETF, with Vanguard closing out at $87.92, down 57 cents on the day, down 0.64%. We now have 10.2847 shares. Average price of getting in for us is $94.79. So we're about $11, or not $11, $7 off of what our average price is. If we go down, you can see the fractional buy here. We got 0.2824 of a share at $88.50 odd cents, coming to a cost of $24.99 Canadian. The greatest thing about dollar cost averaging, which is the secret to bringing your average down in cost, is that we are now getting more units than we were typically getting before. Before, I think we were getting like 0.2225 in that area of a share with the same amount, but now we're getting more units, more shares with the same price. So dollar cost averaging does play into that factor, and that is VFV. So we did make a purchase, as we do every single week with that one. And then we did purchase Manulife Financial Corporation. Now, this is not my worst performing position or my farthest biggest gap from average cost to what it closed out at, but we still bought Manulife. And the reason I did that is because I don't want the portfolio to go over a percentage amount, a set amount in percentage wise of holdings. So Manulife was sitting at below 9%. So we wanted to get it back up there. So we did buy 4 shares today, and we'll go to the trade here. 4 shares at $21.85, total cost of $87.40. And that 21, I think we bought a bit high, didn't we? 21.85 closed out to at 21.68. So average price for us is $22.30. So we can bring that down a bit. So we are now in a losing position when it comes to Manulife, but that's probably a lot of the positions. It's almost seeming like now you'll probably see this effect, but for a lot of the positions that we purchased, we were green at some point, buying on the way up when we started this portfolio, but now we're buying all the way on the down, and you're starting to see that. But the greatest thing about that is the fact that we're able to dollar cost average down, and this might be one of those opportunities. We'll talk about that later in the video. So that is the portfolio here, and we'll go ahead and head over to trackyourdividends.com to update the portfolio here and add the positions that we purchased. So as you can see here, portfolio value of $13,054, up $410. Portfolio yield, if you build it without the updated positions, you would get about 4.25% return on your money. Yield on cost for us is 4.39% because of dollar cost averaging. Annual income per year from dividends is about $555, but we'll go ahead and update the holdings here that we did purchase. So first one is MFC. Now it's not just Manulife, it's .to because we are in Canada, bought 4 shares there, and we bought it at $21.85. Go ahead and add that holding. You'll see the change there, and then we'll add one more for the Vanguard S&P 500, VFV.to. And the amount of shares we bought here is 0.2824 at a cost of 88.5018. And add that holding, and boom, here we are. So if you build the portfolio as it stands, with the updated positions as in you built it today, you would have gotten a yield of about 4.26%. We're getting yield on cost of 4.39%. Our annual income has jumped about $5 to $560 per year, divided quarterly, of course. So as you can see here, Manulife price closed out at $21.68. We got a change of about 13 cents, and our average cost of getting in is $22.30. So as we continue to buy on the way down, we'll continue to dollar cost average down, but you are getting a 6.09% yield on Manulife today, and we're getting about 5.92, and per year we're making about 73.92 in dividends, divided quarterly, of course. And VFV down here looks like it rounds up a little bit, closing out at 87.92, change of 57 cents. Our average cost of getting in is $94.76. So we might start getting more heavy into the Vanguard S&P 500, because I would like this to take up a bigger portion of the portfolio, as I just think it's a good idea for some people. They're really good at individually picking stocks. I'm not that great at it, nor do I think I'm good at it. So the majority of it will probably go into the S&P 500, outside of these companies here and some other companies I hold outside this portfolio. We've lost about $70.45 in this position, and 1.45% yield on VFV, and we're getting 1.35, about $13 per year from VFV. And so that's trackyourdividends.com. We'll head over to ShareSite now. This one has already been updated, and why I use ShareSite is because it includes dividends, it includes currency gain, in factors of portfolio performance. So I have already updated the whole positions up here, and so as you can see here, capital gains were down $2,188.64, down 14.43%. Ouch. Dividends $319.72, up 2.11%, and a currency gain of $274, up 1.81%, which gives us a total return of down $1,594.92, down 10.52%. So that is ShareSite, and that is pretty much it for the video, guys. Other than just want to talk about what I think could potentially be one of the greatest opportunities for our generation of newer investors that haven't experienced huge turmoil, but 2022 has been quite the year, probably the worst year any of us has probably experienced in our investing years, because we've never experienced something like this. I think the closest thing we experienced was 2020, and that was 2 years ago, and dollar cost averaging really worked out in our favor at that time. But now dollar cost averaging, we're buying on the way down. So our first time for new investors experiencing this, you probably don't see the point in doing this, but buying on the way down or investing on the way down brings your dollar cost average down. This is truly that quote unquote buy the dip. And a lot of investors are stockpiling cash because it could turn into one of the greatest opportunities for anyone who's sitting on the sidelines right now and not dollar cost averaging. But it's always been proven and a known fact that dollar cost averaging is the best way to do it, because you have every single day in the market instead of missing out on days of being in the market. So again, that quote unquote better can't time can't time the market. It's time. It's not whatever the time. I don't even know the thing anymore because it's kind of silly, but it's about time in the market, not timing the market. Okay. And so, yeah, just if you're not investing, then you're probably stockpiling money. If you're not stockpiling money, you're probably investing. If you're not doing both, then I don't know what's wrong with you. Just kidding. But dollar cost averaging is the way to go. Stockpiling cash as well. If you can do both, great. If you can only do one or the other, great. Because I think we're going to get to a point where everybody has literally given up on the market. And that is, I believe, when and only when the market starts to go back up, because everyone's kind of just given up. And I shouldn't say give up, but it's just market sentiment for investors. And so if you're preparing for this, you're stockpiling cash, you're getting ready, that's fine. For me, I'm dollar cost averaging in as I always do, and I'll continue to do that. But also, I'll be stockpiling cash as well, because we are starting to see the effects of what's going on in the market. You know, I was looking at real estate, and I'm not investing in real estate. Full disclosure there. And I was thinking of trying to get into real estate this year. However, things have come into the fold where it's probably not going to happen, which is totally fine. But I'm still looking at what's going on in the real estate market. And I've noticed that houses are on the market longer, they're on sale, and they're reducing prices. That probably goes in tandem with rising interest rates, which really takes buyers and turns them into renters eventually, because they just can't qualify with Canada's stress test with the posted rate. And so I was looking at that, and it looks like things are moving. You're starting to take more notice in changes in what's going on, and quite shocked because it was probably a month ago where you saw these prices, but now you're seeing them drop, and these are on new builds, and not just pre-owned. And so, yeah, that's pretty much it what I wanted to talk about. But have a great weekend, guys, and we'll see you in the next one when we make the video on how much we made in dividends from the month of September 2022. But other than that, have a great weekend, and we'll see you in the next one. Bye.